Hi guys, I'm Ryan Mack and welcome back to another episode of the Trading Guys. Today I'm going to be running through what lot size to use. It's a common question for beginners, how do I know what lot to use? Or you get people who maybe, let's say they have $1,000 account and they start using one lot and two lots or 1.5 whatever, and then they have one losing trade and it's really pounded their account. It's because the lot size is too high, and it's a question we get asked many times. What lot size do I use? It's not really one size fits all, but I'm going to show you an application in just 1 second, which is fantastic. And for example, it depends on what type of trader you are. If you're a scalper, then your lot size can actually be bigger because you're only in the market for a very short time and you want to want to maximize on that. If you're a day trader, you would tend to use a smaller lot size than your initial risk, but you would add to the position, so you get static stop loss, right? So that's where you would just enter 2% instantly. Like, let's say it's a scalp, all right? So you enter, let's say 2 lots, depending on the size of your account, 2% risk, 2 lots you enter right away for a scalp. As soon as it goes to a certain, you're up 10 pips or 15 pips, whatever, you exit the trade. That's you done. So you wanna, why you would do that is because if you're about to scalp, then this candle here, you could say, or maybe this candle here, sorry, you could say it's pretty much guaranteed. Now I know nothing is guaranteed in trading, alright, it's just like a term used. It's pretty much guaranteed to at least come to this pivot point. When you get used to trading, you kind of know these things. Oh yeah, look, it's going to reject at the pivot, it's going to come down to the pivot and possibly reject. So you would close your position out when it gets to around here, but you would have had a higher lot size, so your return is more. If you were scalping from here to here, and you were using a really small lot size, like 0.25% of your position, your risk to reward isn't going to be worth it, because you're only going to make a couple of quid here. It's going to be totally pointless, and then your risk is going to, it's going to outweigh what you're willing to gain, so it's not really worth it. But when it comes to day trading, let's say you're going to trade from here and you want to take it all the way down to here, for example, let's just say this because it's actually happened, right? Let's say you want to get into this trade around here and you want to take it all the way up, which you can see it's happened here. Then what you would do is you would use what's called dynamic risk. So you wouldn't enter 2% of your trade here in case it rejects here and pulls back on you. What you would do is you would enter 0.5% of your risk here. Then when it gets to here, you would close 80% of that, move your stop to break even. As this breaks this pivot point, this area of resistance, you would then enter another 0.5% of what you're willing to risk. As it comes up here, as it breaks this resistance, you would then enter another 0.5%, as well as closing 80% of this one. You would enter another 0.5% as it passes, and it's called dynamic risk. You add to your positions slowly and gradually, and that way, let's say 2 of these come in and you've already took 80%, you've got 20% as runners. It comes up to here and you enter, let's say you enter another 0.5% here, and it comes up and then it whips back and stops you out, so you essentially lose the third trade. It doesn't matter because that third trade is only 0.5%, but you're already up 1% from these two, so it doesn't matter. And that's not going to be a full 0.5%, it's going to be a snippet of your 0.5% because of your stop loss. Alright, so that's essentially how it works. You always hear me talk about magic keys. This is magic keys here. It's a fantastic device. It allows you to enter and exit trades rapidly. It allows you to close full position. It allows you to close half a position and close custom. So you can enter the settings here, whatever you want that to be. So some people, their close custom is 25% of the trade. For me, my close custom is 80% of the trade, so that I can close 80% right away and leave the rest as a runner. You can double trade, so if you're already in here for a trade and you want to enter more position, you don't have to mess around by putting all your numbers and stuff in again for stop losses. All you do is just simply hit double trade, double trade, double trade, however many times you want to re-enter that trade. Alright, there's loads here. Automatic to break even, stop loss at break even, target default. I mean, there's just loads of really useful buttons here that you could press, and it just allows you to get in and out of the trade rapidly. Okay, on the phone, let me just show you. Now, look, there is an application here called Stinu. Excuse me for pointing, I know that's rude. If you look here at this, oh sorry, look at this application here. It's called Stinu. You see that? Yeah, it's called Stinu. It's a fantastic application. I'm going to show you it right now. So I'll come closer. So how it works, let's just clear all of this. There we go, clear. So how it works is, you can see here it says account balance, right? You type in here whatever size of account that you have. So let's just say you have $1,000, right? What are you willing to risk? Well, if it's a trend trade, I'm going to risk 2%. If it was a counter trend trade, I'm going to risk 1%. Stop loss is, let's just say it's 25 pips, just an example here. Then you go to forward. Then it gives you currency pairs. Now I trade GJ, so let's have a look, GJ. And then you hit calculate, and that tells you right here on the account size of $1,000, risking 2% means that I am risking $20 on this trade. With a stop loss 25 pips, my lot size is 0.107. You don't have to go as exact as the 7, so you would just say 0.10, which is a mini lot. Okay. Now, obviously, if you change that, if your account size is much higher. Let's just put it all back to 0, sorry. There we go, okay. So let's say you've got a 15 grand account, right? And you have a large account. So risk amount, I'm willing to risk 2%. My stop loss is 19, just to change things up. Euro, USD, calculate. There we go, it then tells you for a 15 grand account, you're risking 2%, you're risking $300 if your stop loss gets hit, and if your stop loss is at 19, your lot size should be 1.579. So we would just say 1 point, oh sorry, that was me hitting that there. You wouldn't type in 1.579, you would just say 1.5, okay? And obviously, if you just go, oh look, actually my stop loss is going to be 24, I've changed it. It instantly tells you, okay, change your stop loss, change your lot size to 1.2. I know it says 1.250, but you just round it off to 1.2. That is a fantastic application to help you. It's so useful. I think you have to pay for it, but it's like $14 for a year subscription. I mean, it's worth its weight in gold. It's fantastic. All right.